welcome to step 3. And what we're going to go over is how to apply effectively using the rating changes. So the first example we're going to look at is Microsoft. So let's go back here to earlier in the year. And what we see is back on September 6, 2012, we have a strong buy that decreases to a hold, which at this point, you should sell 100% of your position because such of a large decrease in the rating value. Then we have a 2, which is a sell, and then a strong sell. We should be completely out of this position at this point. Now, what we really want to monitor is we hit an approaching oversold level, which we do not own secure. We should not be buying anything on an approaching oversold or oversold level. We will show you an example of an extremely oversold counter trend trade for the most aggressive traders later on. But what we want to see here is we had an approaching oversold level that bounces from a 1 to a 2. So Microsoft here, in this case, had the opportunity to sell off and now is increasing in strength. For the most aggressive of traders, you may want to start a quarter position here at this 3. Most traders should wait until this 4. So again, we had the opportunity for a sell-off. It didn't come at approaching oversold and started to gradually increase from a 2, 3, and a 4. Now remember, the greatest risk to reward trade is when a 4 moves to a 5. So if you're a little more aggressive, you want to start a position here at this 4 and take a full position at this 5. So your average cost is about $28. And how the process here is fairly simple. You're going to sell 50% of your position at $35.59 at approaching overbought, and then you're going to sell the other 50% of your 50%. So now you only have a 25% position left, and now the stock gets hit after earnings. Let me just go back to the original view here. After earnings, and drops significantly. At this point, we could sell this stock. It's in the penalty box, and we're going to look for better ideas where the stock is stronger. Now, you can see here it was downgraded to a 4, and then downgraded to a 2, back to a 3, back to a 2. So this gyration back from a sell to a hold to a sell, there's no opportunity here. Then we go back to a 3. I wouldn't take a position here. You had a lot of gyration. Now we go back to a 4, which now it starts to get interesting. I want to keep this on my watch list and potentially take a position once this goes back to a 5. So since this 5 rating, the stock is up about 9.5%. So we made 2 trades within 1 year, generating a 35% return. Let's take a look at another high probability idea. Which is AIG. Okay, so why this is a high probability setup is the stock decreases from a buy to a hold to a 2 or a sell to a strong sell in a rapid order, and then what we consider a bottom, because in a rapid advance in the ratings, we see it move from a strong sell, sell, hold, buy. Now in this case where you have this rapid progression in the rating, we would take a quarter to a half a position here at this 4. Again, full position once it moves to a 5. Now, it's very similar. We held this position for 10 months, which generated about a 45% return. We want to sell 50% at this 49.70. We want to sell the other 50% at 52.30. The stock had lousy earnings. The stock somewhat, I don't want to say cratered, but had a significant decline and was downgraded to a 4. At this point, after the earnings, we just want to sell the remaining 25% because at this juncture, we're going to look for stronger stocks that have the highest rating value, and we're going to sell our AIG. We had a fantastic return in 10 months, and now we're out of the stock. So that's another high probability setup. Also, let's just look at how we want to control our downside risk based on your risk objectives. So I hope the high profile trade here, which was Apple. So we took a position here at this 4. Now we made 4 trades within the last 13, 14 months in Apple that generated a 50% return. So if you followed the rating system exactly that we're displaying here, you would have done the same exact thing. So we took a quarter position at this 4 at almost 550, and then we took the rest of the position here at about 586. So our average cost is somewhere around the 560 level. Now, here is what you want to pay attention to. We're going to sell 50% on September 30th at around 680. Now the stock is downgraded to a 4. Now, everybody has their own risk objectives and their own tolerance for risk. So on a downgrade from a 4, for the most conservative investors, you're probably going to want to sell the entire position at this point because you still have a profit of about 80 points in this name. You've already sold 50% up here. At this point, the stock is getting weaker. You want to sell it. For the most aggressive investors, you might just want to leave this position on even as it deteriorates to the 4 and maybe just sell the rest when the stock moves to a 3 to see if it will hold that level here, which it did not, obviously. So at this juncture, for the most aggressive traders, we're going to sell this position around 620, and we're completely out of the stock. So most of you, almost all of you, should have not held this position as it went to a 2 because you had plenty of opportunity on those 2 downgrades. And then almost an entire year later, we didn't receive another buy signal until August. Now, I want to show you just this counter trend trade that we discussed earlier. Now, we don't want to try to pick bottoms. It's very dangerous. However, sometimes the extremely oversold levels have high probability reversion to the mean trades just off the bottom, and we would use a very tight stop loss of 2.5 to 3%. So here on this extremely oversold level, you could see Apple had a 389 level. Show you another example. JCPenney. And here's an example of how we would protect you from the downside. We went to a sell at 1627. Never had another buy signal. Again, we don't buy anything at approaching oversold or oversold, but the extremely oversold level does present an opportunity. So it's $6.42. The stock, as we can see, is now trading at $9. That was a 40% return. So at this point, we would most likely be selling this stock or be looking for any weakness or keep moving up our stop loss. And I'll show you one other trade in the counter trend as well. So we also have gold here. And again, we were sellers of gold back in January. And then again, we had a short-term mean reversion opportunity right here at 115. And we would have been probably sellers as this deteriorated over here.